My name is Lisa Friedman. I'm a climate reporter at the New York Times. This is my 11th COP. And as ever, there are tense deliberations happening here in week one of the conference. As some of the world leaders who have been here at the beginning of the week depart, the narrative around the negotiations is moving slightly away from the high-level speeches and commitments to more specific topic areas. We're following the same approach with our programming here. Yesterday, my colleagues led conversations on loss and damage, Africa's energy future, scientific tipping points, and the interaction between climate progress and political freedom. Today, we're going to go one level deeper. We have discussions about extreme heat, reforestation, the decarbonization of heavy industries, and interactive workshops. I'm particularly excited about the discussion with new Executive Secretary of the UNFCCC, Simon Steele, who I will be interviewing later on. You can find all the details on our online agenda. Welcome to those of you here in person and those joining online from around the world. You can join the conversation using the online hashtag NYTCF. Now, we're going to dive straight in this morning. It's Finance Day at COP27. You'll remember that at COP26 in Glasgow, one of the most significant developments was not from an agreement between governments, but among members of the private sector. The Glasgow Financial Alliance for Net Zero included 450 institutions, major banks, pension funds, insurers, together controlling 130 trillion of assets. And they committed to using that capital to hit net zero emissions targets in their investments by 2050. It would be a transformation of the global financial system if those commitments were made good. And though it is still early days, the coalition has had challenges. 2 pension funds have left, US banks have threatened to leave over worries of litigation, and just last week, the Alliance dropped the requirement to sign up for the UN emissions reduction campaign, the Race to Zero. But it's not just the Finance Alliance, or GFANCE as it is called, that is having challenges. Private climate finance broadly is projected to decline this year amid global investment downturn. But world leaders need private finance to address the challenge before us. $5 trillion a year will be necessary to make the transformation necessary to avoid warming above 1.5 degrees. What will it take to ensure that private finance fulfills its commitment to mitigation, adaptation, and resilience? I'm delighted to welcome to the stage 3 speakers who are going to help us unpack the answers to some of these questions. I'd like to welcome to the stage Nicolette Bartlett, the Chief Impact Officer of CDP, formerly the Carbon Disclosure Project, a non-for-profit organization that turns disclosure systems for companies and investors regarding environmental impacts. We have Mukwandi Chibasakunda, CEO of the Zambia National Commercial Bank. And last but not least, Uday Kema, Vice Chairman of the Nand and Jeet Kema Foundation. Thank you all so much for joining us. It's a big question we're tackling today, and so I want to start by exploring why private finance broadly appears to be stepping back, and then move forward to what it will take for these commitments to be fulfilled. Uday, let me start with you. As someone who has a lot of experience investing in emerging markets, namely India, how do you view the global markets right now in climate finance?
I think that we cannot ignore the global context of the challenges faced by the world economy. At the same time, as we think strategically about how this money will move, from an institutional investor standpoint, and I speak more not as an investor in India, but working through our foundation on climate finance for 17 years with pension funds and sovereign wealth funds, I think there are certain obstacles and challenges that we can really unlock. That makes me optimistic that if we were to unlock them, we could actually move huge amounts of long-term institutional capital into green infrastructure in the South and in the North.
See, I'm a journalist, so I'm professionally cynical. Tell me what makes you optimistic.
Well, what makes me optimistic is the dawning realization that it's actually not about the investors. It's about the sectors themselves. So technology is abundantly here, whether it's solar, wind, EV technology, even green hydrogen. It's here. The problem, for many years, we thought it was all about sitting and spending huge amounts of time with institutional investors. I have spent 17 years doing that. And the same answer keeps coming up. It's not about the investors. It's about taking these new sectors in new countries and getting people who do not speak to each other to speak to each other. That's to say the regulators, the governments, the people who, for example, in electric mobility provide the electrons, the power companies, the people who manufacture the electric buses, the people who operate those buses, put it all together. That would happen naturally in capitalism over 10 to 15 years. As those conversations happened, those sectors would emerge. We don't have that time. We've got 5 years to do this in. This decade matters. So what we need to do is force function those conversations, and we can do that. And a number of processes across the planet are doing that. Once you've done that, most of it is de-risked. And what you then have to do is do something else, which is make sure that the very shattered and scattered community of global blended finance can be narrowly focused on those projects. There's a coordination mechanism across that shattered world of blended finance. So I'm actually calling for two institutions, a green development and investment bank to be created, and separately, a coordinating mechanism for all global blended finance. Those two things would allow this to happen.
That's great. Makwani, we were speaking backstage about some of the really interesting funds that you're working on in the climate space. Maybe you could say a few words about those and sort of what you're experiencing on the ground trying to seek global investments for that, and how has this decline in finance affected you and your country?
Thanks, Lisa, and thank you for having us at the table, so to speak. From an African perspective, what is clear is that we need to change from the victim narrative to one where we're actually driving the outcomes. And as Zanaco in Zambia, Zambia being a Central African country, rich in minerals, rich in so many things, waiting for finance to come from external is not necessarily the solution. So as Zanaco, what we have decided to do is to see what we can start with. And we have put together a fund that will then finance the local players that are driving solar energy, that are driving resilient solutions, that are getting rid of deforestation. Because in Zambia, we have the highest deforestation in Africa and the third highest in the world. Currently, we are a net carbon taker, but if we don't change this, in the next 5 to 10 years, it'll shift. And we, as a local community, need to make that difference. So Zanaco is the largest bank in Zambia, and we have been able to put together these solutions that are laying the foundation for the future from an African perspective, from a Zambian perspective, from a global perspective, to begin to address climate and to get us to a point where we're actually able to shift the dial and make a difference for the communities on the ground. Thank you.
And though you're not waiting for investment, global investment would surely help. What has your experience been in seeking that?
What we have found, actually, now that we have put in place a few initiatives, some of them are really quite simple. Advocacy on the ground. People didn't know that if they cut down trees and make charcoal, then they're hurting the future generations. They just did not know. So we are making people aware. We're planting 1 million trees over 3 years. We are, in the various fund solutions that we have put in place, we have identified partners in the pipeline of projects that we are funding. And they're very small projects. They don't really make that big a difference. But because we have started somewhere, we have found that other players are now interested. They're now talking to us about it and saying, how can we multiply what you're doing as Zanaco? How can we create that journey towards a resilient continent? And so on that basis, we have recently just been accredited to GCF. We have partnered with BII. We have partnered with the EIB as Zanaco. So we believe that the global finance mechanisms are now going to come to us But it starts with us. We don't go out there and wait for that solution to come to us. We implement the solutions, and then we go to the global finance sector, and we say, look at what we're doing. Can you work with us to create that multiplier effect?
Nicolette, CDP has set the standard for data regarding a company's climate impact. It seems that there is a real drop in accountability for climate finance actors. I wonder if you agree, disagree, what you make of what you're seeing.
I don't think there's been a drop, Lisa. What I think there has been is a shift. The rubber's hitting the road now. And so you've got sort of the first layer of, sorry, very loud. The first layer of accountability, I think, is coming into place. And what that really means is landing in people's consciousness. If you look at, CDP, we started out with just 100 investors representing just a few billions. And we now have over 680 representing 130 trillion in assets. So we see continuous focus and from the finance sector, but I think what's happening now is they're moving from the passive, we need data, we need companies to do stuff, to the active, and recognizing that it's actually their role to play. Now, I think both speakers have really covered the key point. The capital allocation that has to happen happens in the real economy. That's where the actual infrastructure gets built. That's where the products and services come from. But those companies are in portfolios, obviously our financial institutions. And what's really coming through now is they're grappling with what it takes to actually have a portfolio of assets that is transitioning. And that's how you provide transitioning finance. And nobody has all the answers. And I think what's happening now is the true scale of what we need to achieve in such a short time is really dawning on people. I think one of the tools that we have available to really look at if a portfolio is transitioning is looking at each and every asset class, looking at all the companies within it, and starting to question, are they transitioning, and how do you measure that? And that's really where the conversation, that's where the accountability conversation is coming into play now. And it will be about transition plans, for example. It will be about how those companies are integrating this into their governance. It'll be about their capital allocation, all of which obviously needs data for the finance sector to measure that and account for that. And I think that's where we are now, is they're grappling with a lack of data, which of course is a really frustrating thing to say after 22 years of doing this, but there is still a lot missing in the space from an accountability and a transparency perspective. And then how do they ensure that their finance is going to companies in the real economy that are transitioning, not just those companies who may be doing the new economy, but those companies who are still working with fossil fuels, who are in the hard-to-abate sectors? How do they measure and support them in transitioning from one place to the new economy?
And when it comes to things like the Finance Alliance, the FT recently cited one unnamed senior executive at a U.S. bank who said it would be immoral and irresponsible for banks to open themselves up to the liability created by the UN's climate criteria. Do you have thoughts on how, real the risks are from an investment perspective?
I think there are so many risks, right? What I think is emerging from that is that tension we now have, which is that the regulation policy structures need to actually be aligning in reality, which is where some of these banks will be hitting a challenge, right? So some of the criteria are based on moving away from new fossil fuel expansion. And at the same time, in many parts of the world, fossil fuels are expanding with, in the developed world in particular, now with the energy crisis, with those governments not aligning policy with moving away from, right? And so a bank hits a challenge. And of course in the US, it's a unique challenge in certain states about how they align, because it's a very politically charged issue right now, right? Really politically charged. I mean, you're not used to seeing BlackRock's CEO having to defend. I mean, can you imagine them turning into climate heroes, right? Having to defend, daring to have their portfolios manage climate risk, which is the most rational thing to do. And frankly, you know, the moral issue there is off the charts. So I think the risks abound, but I think the real risk is, you know, I feel as if some folks are living in sort of, there's a third world. And there really is. I remember in the Bank of England's first stress test that they did, you know, at one of the meetings they were at with banks, it was really interesting. They said, well, I want to see two scenarios that you're stress testing against. One is that the economy aligns at the pace that it needs to align. So it's your transition risk is X, Y, and Z. Or we don't. But then your physical risk is massive. And if I don't see a scenario where you haven't stress tested against that physical risk, then I don't know what world you live in, because there are only those two worlds and shades of those two worlds. There isn't a third world where you can continue. I know then you are not ready for the future. And I think that's what's happening now. I think what's most exciting is what's happening with the central bank, is the financial regulators really leaning in, looking under the hood and going, gosh, this risk is rather alarming. And that's where I think that the rubber's hitting the road now.
And just for those who may not be aware, one of the things that Nicolette was referring to were proposed disclosure regulations from the SEC in the United States, which I'd love to circle back to later in the conversation. But I want to turn to the impact of the war in Ukraine. And the pressures it's exerting on the investment environment are clearly a challenge. Uday, do you have how much of a setback has this war been in getting financial firms to stick to their commitments?
Look, I think the problem for developing countries is that we've moved into a bit of a risk-off part of the economic cycle.
What does that mean?
Which means that we've seen this, capitalism goes in cycles. And as risks emerge, people tend to go back to sanctuaries, like the US dollar, for example. And the Ukraine war has not necessarily helped. And oil prices have not helped. Cost of living has not helped. And all of this means that investors have been going back to, you know, less risky investment asset classes. And that hasn't helped any of us. It has also meant that, of course, some European governments have had to turn back on fossil fuel-based generation, which hasn't helped. However, on the other side, there is a clear recognition in Europe that they need to diversify their energy supplies. And therefore, because I work closely with a number of the decision makers in Brussels, there's a real and sincere, genuine desire now to use this as an opportunity to move towards green generation sources in Europe, even in North Africa, to evacuate power and green hydrogen into Europe. And so it could be, it's a double-edged sword.
Makwan, do you have these same pressures affected climate finance in sub-Saharan Africa? What has your experience been on the rush for African gas?
I think what has happened in the recent past is a bit of a reality check globally.
How so?
When you look at livelihoods on the ground, that's the primary concern of most communities. And if they're being hit by inflation, by energy pricing, part of the go-to process is survival first. And in that process, the reality check happens. And at that point, there has to be a very clear decision as to what the priorities are and how to balance between survival today and survival tomorrow. That's what we're experiencing on the ground in Africa. We do have issues on the ground with our community, but we believe that it's a journey, and we need to find that balance and just make sure that we don't lose the journey that we've already started with regards to climate and what needs to be done in that space, and to what extent the communities are allowed to create that balancing structure for today to survive, but also to survive tomorrow. In order to do that, what we have found, for example, are alternatives. So in Zambia, what we have been able to do is look for other fuel sources other than the fossil fuel ones. So rather than to go back to coal, we then say, okay, how do we create a structure that does not take us back to where we don't want to go? We also have conservation farming, which, again, reduces the amount of deforestation because we realize our role for the world. We're the lungs, jointly with Brazil and other countries that have huge forests. So we can't go back. That is clear. But how do we find a solution for today and make sure that our communities are aware of that and we're not giving too much pain to the communities in the intervening period? Otherwise, we'll lose the progress that we've made so far. So that's the balancing act that is currently underway. And I think we're making good progress so far. We're optimistic. Thank you.
Yeah. Nicolette, what are you seeing? How much of a setback has the war been? Are there spots of optimism that you're seeing?
Yeah, it's really interesting. I think if you look at, I actually think this is one of the biggest triggers towards really large-scale shifts to clean energy in certain parts of the world. It's quite interesting. Right now, I mean, the way in which the Germans responded was fascinating to me. On the one hand, yes, absolutely, having to put on some coal-fired power plants again, but being at the same time, bringing forward their dates for 100% renewable energy, right? Because they know that's the future. Because right now, what's very clear is the energy costs that are rising in Europe are completely linked to gas. And it's the first time we start to see that clean energy has a different power structure, decentralized systems, isn't linked to a few countries, potentially to very dictatorial systems, right? Whereas clean energy is a completely different type of energy system. And I think, and secondly, it is now the cheaper form of energy in these countries in the north. And that's the sweet spot, right? And so that's the first thing I would say. Number two, in terms of companies, so far we see an increase that in the last year, we had a record increase in the number of companies coming to CDP, disclosing on climate, setting targets, etc., and a record increase, 42% jump from last year. And the majority of that comes from the Asian countries. And that's the interesting bit. This is now becoming the thing to these Asian countries. And again, with the monetary authority stepping in, the stock exchanges stepping in. So I do see us having the energy crisis impact certain decisions that are being made, certainly within the big fossil fuel companies and some of the banking world, and some of the countries doing some of, the United Kingdom choosing some crazy old paradigms. But at the same time, the underlying trend is still moving in one direction. So I'm, apart from the horrors of that, of the war causing the energy crisis, quite optimistic about what's actually happened as a result of it.
Okay, you wanted to jump in?
Yeah, I wanted to pick up that point because I completely agree with it. If you look at my country, India, we have been a big net importer of fossil fuels. And yet we have the highest solar irradiation on the planet. And it's for that reason that the Indian government has been pushing solarization and EVs on a big scale. Now, if you look at the Ukraine crisis, it's in some way analogous to what happened in the early 70s with the oil shock. And the oil shock led to California, Japan, and so forth, creating tremendous energy efficiency. This shock we're having now shows you that you do need to become autonomous in your energy usage and requirements and production. And with solar and wind, you can have energy secured. And we forget this convergence is so important between climate change mitigation and energy security. So I couldn't agree more. And that's one reason why Asian countries perhaps are jumping on board. And this could be a great moment. I know it's a trite aphorism that you should never waste a good crisis, but this is certainly a crisis we should not waste.
I want to look to the future on disclosures, regulation. One of the complaints that banks have made is that demands placed on them in their net zero commitments, et cetera, have not been supported by strong government action on the other side. Makwandi, have you heard this argument before?
Yes.
Can you kind of help us unpack what this means, right? I mean, is it just a matter of banks saying they don't want to go first?
The nature of regulators is that they always are a step or two behind what's really happening. And so what tends to happen is after the fact, then the regulators have to now work on a structure that makes the base appropriate for whatever players in the economy. And that is the same for the climate issues. And our role as the private sector players is to educate our regulators, educate the policymakers, and work with them to identify those solutions that will work best for us. But I think the pace is rather slow, and we need to come together as a community and put together almost a roadmap that everyone can just pick up on and use. Rather than for each of us to reinvent the wheel, how do we get all our regulators and policymakers to shift their mindsets so that they can support us as we go on this journey? I agree that it's actually a complete mismatch. It's almost as though they're a bit schizophrenic, because one minute they'll say one thing and the next they'll say another. But they need to be educated and they need to be given the tools to actually make the right calls.
Nicolette, do you think that there are limitations to what private actors can achieve in the absence of robust government policy?
Without a doubt. So I fully agree that regulation follows potentially leading edge practice. But that's leading edge, right? That's not where the majority necessarily is, which is why you need regulation. And I think we're now at that place, again, rubber hitting the road. So the whole theory of things like GFANs and the Race to Zero and the Science-Based Targets Initiative, and even CDP's raison d'etre, is making it doable, proving they are leaders, proving that they will commit, and then going into an ambition loop. For CDP, it is, we will prove it's doable and then make the regulation happen faster. So for example, our data will show in every country, whether it's the SEC proposed rule, whether it's now integrating the ISSB, our aim is to have companies do it, make it doable. Once it's being done, the regulation follows much quicker because you've proven it's doable. You can show the data, but look, 62% of companies are doing this. Scope 3 is not impossible. Here, this is how many US companies are doing it, right? So, but with the ambition loop, you can also turn it into a catch-22. So you might end up in a place where things get stalled because companies will say, or banks will say, well, we don't have the regulation, we can't do it. And you have to flip this, and then you have to hold them to account. Because we are seeing a world where corporates are absolutely, the leading edge corporates are getting behind things, are signing letters, are supporting in the public space certain regulation. But what we need to see more of is when they go in and they have their 5 minutes with the head of state or with the Treasury, what do they have as their top 3 asks? And if it's not on that list, then we won't see the shift happen. And so I think that's where we're at now, is we need to start really looking under the hood of those conversations, because we need to get into a dynamic. And I couldn't agree more that it is capacity building and education, but not just for regulators. I mean, I think the amount of knowledge we are going to need, and I'm sure all of you will have recognized this, there's probably, a few thousand people right now on the planet who actually get this stuff properly. We need millions of people to get this. Every banker needs to know how to structure a deal in a new type of economy. They don't. They honestly don't. They need to know how to align their portfolios. They don't. So the capacity building that has to be done is at scale, and but I don't think we can ever get there without the policy environment. I think the whole point, and it sometimes gets forgotten, of voluntary initiatives is to trigger that exact thing. And we have to keep our eye on that goal.
Dave, do you agree?
I think the whole point here is that the 3 sectors, that's to say, and I do agree, the policy makers, the regulators, and incentive providers, let's call that government, industry and the corporate world, and the investment world have to have these conversations together, sector by sector by sector, to crack those obstacles to investment that exist now, which can easily be cracked, but would take 15 years to figure out naturally. And to do that through convened processes. Some of us working with sovereign wealth funds and pension funds are doing that. What we now need, which is why I was calling out the need for an institution to do this, is to do this on a global scale. It doesn't need much money. It's not a balance sheet institution. It's a convening institution that brings together, sector by sector, the greatest corporations, the relevant governments, and the largest investors to sit in the room and say, what do we need?
Is that your pitch for the green bank that you've been discussing? This is the global green
I'm
bank?
calling it a green development and investment bank. By development, I don't mean that it has a balance sheet. I just mean it brings together these convening processes to crack sector by sector the opportunities. And investment means it then makes those opportunities available to investors around the planet. That function, no one is doing right now. Extraordinary.
In the U.S., of course, the Biden administration and Congress recently passed the Inflation Reduction Act, $370 billion over 10 years, investments in clean energy. Is that going to reverberate globally, or does this help beyond the U.S.? Does it have an impact on private investment broadly? What are you seeing in Africa?
Not yet.
Not yet.
But I believe that, as I said earlier, rather than to wait for the investments to land in Africa, we in Africa need to start. And then we will be ready for those investments when they do land, rather than for us to keep pushing for that money to get there. We flip the script, so to speak, and we need to be purposeful about it and lead the conversation in the right direction. So there's a lot of investment opportunity from an African perspective to drive this agenda forward. And I really do believe that if we prepare ourselves as an African continent, as individual countries in Africa, as the private sector in Africa, we will be ready for that investment when it is ready to come to us.
There is an expectation that this Inflation Reduction Act investment will drive down globally the price of some clean energy. Do you expect, maybe Uday or Nicolette, that this will, broadly help investments in clean energy elsewhere?
So I don't see how it can't. I mean, I think there's two things that are really important. Number one, the United States finally has some form of major regulation on climate change, legislation. There's no way that doesn't affect the world.
Very different than regulation.
Yeah,
Not
not regulation. Yeah.
redone.
But let's just let that sink in, right? After all this time, the world's biggest economy has that. Of course that's going to reverberate around the world. And for me, there's two parts that will happen. One, absolutely, it will drive more investment into these technologies, which then, because it's the world's biggest economy, will have an impact on that happening globally, given. But also number two, I think is the political shift it could create, potentially. If you look at countries, Germany's Energiewende, the way the Danish went after wind, there were two shifts that had to happen. Scale, there had to be feed-in tariffs and money and incentives. Some of the same incentives are embedded in the Inflation Reduction Act. But it caused citizens to get access to those technologies. So some of the technologies there are for citizens. Mean that people will get a heat pump, potentially. If their states, obviously that's the trick here, is the actual states need to be aligned and allow for those structures to come into their states. That may not happen in every state. But there are many mayors, for example, that are really leaning in, wanting to ensure that their city and their citizens get access to that. Now, what does that do? It means that human being X, Y, or Z potentially invests in a heat pump, potentially has solar panels. Now, why does that? It seems such a small thing, but it's not, because then it becomes normalized. So the teeth of the political chargedness gets removed. Because if you start to say, well, clean energy X, Y, or Z, and you've got clean energy at home, you're no longer going to be able to politicize that issue. And it happened in Germany because they had an incentive. They got new technology. They had a feed-in tariff. It's not quite the same thing as the Inflation Reduction Act, but the point being, you took the clause out of making clean energy a political issue, which I think is subtle, but really powerful, because that has been the issue in the United States. For some extraordinary reason, a scientific fact and a set of really cool new technologies have been politicized. And unless and until that is shifted, you have an issue in the United States, which means the world has an issue. And that's what I'm hoping is the subtle magic of the Inflation Reduction Act.
Normalize heat pumps. I'm going to open up for questions in a moment. As I call on you, please tell us your name and affiliation, and if we could ask that you keep it to a question and not a statement, we would be grateful. I see any hands in the audience? Woman in the second, third row in the yellow. Thank you.
Hi, Julie Pullen, climate scientist and oceanographer now with Propeller Ventures. You mentioned really a lovely phrase of ambition loops. And I wonder if you could describe more what you're seeing of some of the most impactful ones that you're noticing that you might be able to draw attention to.
Sure, we have a few examples. So we're part of a coalition at CDP, and a few of the business-facing climate NGOs are part of a coalition called We Mean Business. And we have a very broad tent, but has set the bar very high of what corporate ambition should look like. And we've had quite a few moments where we've been able to shift something in a policy space because we had that ambitious company agenda. So European Union, there's been times when it essentially created a bench of companies who really care that this policy aligns in the right way because they have set themselves really hairy, scary targets, and they mean to achieve them, and they're going to hit roadblocks, right? As they can go very hard, very fast, and at some point, they need to see a shift in policy. Otherwise, it's either uneconomic or almost impossible because of planning regulations or whatever. And there's been quite a few examples where we've been able to mobilize them quite practically to either get on the phone, get into rooms before a decision gets made. For example, the targets for the European Union, the decarbonization targets for 2030. Many companies stepped in really actively there because they were committed to science-based targets. They had set themselves 100% renewable energy goals, and so those targets in the European Union really mattered to them. And it was amazing to watch. So there's been many examples of where I've seen it practically play out. Many of these same companies during the Inflation Reduction Act were behind it, shouting from the rooftops, yes, we're in, we support this. I've also seen examples where companies have committed themselves on the other side and then have come out against something. And that's been very disappointing to see. But the majority of the time, if you have companies truly committed to something, like through a science-based target, the scrutiny on them becomes higher, and then they will step up in certain policy fora and absolutely support. It doesn't mean that policy always comes in, though, because they are not the only voice at the table, but it does activate their potential power within policy-making circles, a lot more than if they hadn't had that target.
We've got a question in the front row over here.
Thank you so much. It's Charles Perry from RISE. On the topic of scaling trillions and private finance in particular, we've been talking about GFANs. I mean, any suggestions? I mean, Uday, you talk to a lot of global asset owners about what needs to be done to really get global asset owners, not asset managers, asset owners, much more into the frame on, for example, Race to Zero and on investing in big things like municipal electric vehicles that you mentioned?
Thank you. Global asset owners have a different set of agendas to global asset managers. They're looking to own assets over decades, and they're some of the largest investors in the world. For them, they don't want to trade assets necessarily, they want the yield. That gives them a tremendous advantage in the sense that they lower the cost of capital for green infrastructure around the planet. The difficulty they have is the scale deal flow I mentioned earlier. You mentioned municipal buses. We've actually, for 3 years, worked on a project around the planet, bringing together regulators and manufacturers and investors to look at what it would take to make that sector the equivalent of solar and wind. And it can be done. But it's precisely that needs this coordinating mechanism I mentioned, to aggregate that, to put the right regulations in place. And you can create asset category after asset category that does not require private equity rates of return, but infrastructure rates of return. The United States was built on much lower cost of capital, bonds for the railroads and the canals. That's the sort of capital we need. And that capital is abundantly available if only we could create this institution to coordinate the de-risking of sector after sector, as we have been doing for municipal buses, for green hydrogen, for deep sea wind, all the sectors that are coming up now. We can do this. Thank you.
As I look for other hands, right here in the front, brown suit.
Hi, Sophie Lambert from Kite Insights. My question relates to the challenge of financing adaptation. The prediction is 340 billion costs from 2030 per year, and the conversation has been mostly about mitigation. I'd just love to hear your thoughts on that.
It's a very good point. We've barely touched on financing adaptation, and that is a reflection of the amount of money that has gone into adaptation versus mitigation. Nicolette and then maybe Mukwandi.
I think this is absolutely fundamental, right? Because, and the gap is huge. And I think the same focused efforts that have to happen that you're talking about is what needs to happen for adaptation. I've seen quite a few events and announcements at this COP that are focused on that, and that's really exciting. And it won't be as sexy as trillions flowing to, but it's actually really fundamental. There's the new sustainability-linked bonds, but essentially what it helps to do is de-risk if a company's, for example, let's take Pakistan has a flood, hit it, right? Which it did. In that moment, they will have an extraordinary amount of interest to pay on their debts. The structure of those bonds could have been structured in such a way that during a climate crisis, if they can pause that payment, that will unlock more money for them than governments sending money across. My point is we need to get under the hood. I think there's creative ways that can be done, and I think if you listen around the COP, that's what some of the really deep conversations have been focused on. I'd really like to see more of that, and if Egypt can unlock just 2 or 3 of those innovative mechanisms, it won't be as sexy, it won't grab the headlines, but it could be game-changing, because no matter how well we do, no matter how much we have to keep the hope alive for 1.5, adaptation and crises are going to hit us daily, and we have to get that right.
Mukwandi, what are you
I was just going to agree, actually, and it has the biggest opportunity in Africa, as it happens. And we believe that in future, this will become much more of a conversation. It's a journey, again, and at a particular point in time, there will be focus on certain key streams, but adaptation needs to become more of a conversation, and it starts with us. And as we now pull together and identify what are those opportunities for us to really build in the sustainability action for adaptation, the funding will come. I keep saying that the funding follows the conversations, funding follows the structures, the governance, the models, and just making sure that the data is available to support what it is that we're trying to do. I think with that, there will be funding that will open up, and perhaps it's Uday's structure that will help us make it happen.
Well, that ends us on a note of optimism for the future. We have, the clock is ticking. If maybe very, very quickly, Uday, I'll give you the final note. What is the single most important thing that you think can happen between now and COP28 to scale up climate finance?
Launch the Green
Oh,
Development
sorry, I
and Investment Bank and create a global mechanism for blended finance.
Thank you so much, everybody, for your time, and thank you so much to all of our wonderful panelists.